Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, January the 16th, 2023. Again, quiet market. The U.S. markets were closed today. Globex was open, and during that Globex session from yesterday, Sunday to Monday, the S&P did get very close to that 0.618 retracement level at 4030, with yesterday's or the overnight high coming in at 4020. Let me just get exact, 4028.25. So as I take a look at this pattern, again, we are continuing to travel up in a minor second wave. I have no reason to change that count or even the labeling. I did take a look. If we take it out, we can quickly pull it out to the daily. We can see here we have the intermediate 1 and 2, minor 1 and 2. And as this did not look bullish, this does not look bullish. And I can take that off for right now, and we can just take a look at the chart itself. It just is not very bullish looking, and the labeling is pretty consistent with actually what is going on. So holding that in place, I'm continuing to look for a minor third wave, or minor wave 2 to complete, and a minor third wave to kick in. Again, what we do have coming this week, just to do a quick review, we have no real numbers tomorrow, pretty much nothing. We have one Fed governor who will be out speaking and stumping, and that'll come in about 3 p.m. Eastern. On Wednesday, though, pre-market, we have PPI final, retail sales, and industrial production. And those are all going to come pre-market. PPI final and retail sales at 8:30 a.m. Eastern, industrial production at 9:15. On Thursday, we have housing starts, jobless claims, and Philly Fed. And those all come out pre-market at 8:30 a.m. Eastern. Now, if I were to put my thumb on something to say what really could be a market mover, I'm going to say that it could be PPI final, retail, or industrial production tomorrow. And then on Thursday, we're going to have jobless claims and Philly Fed. Housing starts and permits may, but as far as giving us additional clues on inflation, on its progression or its increase or whatever the market might be looking for, I think that's going to come via jobless claims, Philly Fed on Thursday, PPI final, and industrial production on Wednesday. Back at the ranch, though, I still believe that we are within, again, this larger intermediate wave 3 coming down. It is part of a primary C wave coming down. I think that all needs to finish prior to beginning, of course, the cycle wave B. We need to finish cycle wave A. And I don't, I start to believe that we might be halfway down to finishing this primary C wave, but without the start of the third wave, I don't think so. So we're not even really halfway there. And I think that what we're getting ready to enter into could move the market very quickly in the direction of the trend, which of course now is still down. So, but how and when that begins, roll the dice, and that's anybody's guess. So back to the hourly chart, I'm still pretty satisfied with the fact that this minor wave 2 is taking the shape of a triple ABC. Again, ABC with an X, ABC the second X, ABC the third sequence. And we're inside that C wave. Now, up until this point, it was all very flat. Right? The first 2.5 were very flat structures. And it was finally in this last C wave up that we got into territories that should have been reached or be reached to complete the move. So first thing I want to add to our chart is, again, I'm going to put up the retracement levels for the wave 2, and that will encompass all of wave 1. So that's what we're correcting, minor wave 1. So I'm going to put this, come on there. Okay, that down to there, and then go back to my hourly chart. So again, we got close to that 40.32 resistance level. And if I come inside what appears to be this small subminute fifth wave up to complete the minute C wave, to complete the minor wave 2, it seems that we're in 1, 2, 3, 4, maybe, or we might come down, test that level, drop a little bit below 39.96, maybe down to 86, and that puts wave 4, and then we do a wave 5, and it still kind of could come in as a little bit of a diagonal, although the third, pretty clean, looking like it could be a pretty clean 1, 2, 3, 4, 5. So again, pattern is the pattern. Right now, continue to leave open the potential for an additional small run up. And if that's the case, and this is 3 and this is 4, I can put on, we can run some additional fibs. I don't know the accuracy of those fibs because should we be going from here? Should we be going there? But right now I'm just going to run it for, if this is 1 and this is 2 and this is 3 and this is 4, again, we don't know, but we're going to just take a look at what the possibilities would be if indeed it was. So we'll put that down to there. We'll put this right there. So again, what we have is we start to bunch up against 40.32. And we have right above that 40.38, which is where the fifth wave would be 0.618 of the third wave. And then we can continue to move up the scale. 0.70, 0.5, 70.5% is at 40.42, 40.4250 in that neighborhood. 40.50 still in the picture. And then at the top side, we have 40.68 to 40.65, and that would equal 100%, where wave 5 would be equal to wave C. Again, the structure itself, we have to allow for it, but that's not necessarily what I'm going to be looking for. I think that the market is getting a little tired and it's going to need something stronger than what we're getting thus far to give it any additional push. But we may see it tomorrow, being that today was a holiday. And we did see some of the buying come in yesterday at the opening of the Globex session. But again, we've got to see what's going to happen today. Globex opens in about 50 minutes. And we will, or 40 minutes, excuse me. And we'll go from there in terms of what the market's going to do. It may remain again, be very quiet until everybody's back on hand tomorrow morning. Again, we still have the European markets and we have the Asian markets that are going to open, put their 2 cents into what is going on. We already know that the myriad of reasons that a market's going to move in either direction. We have some very strong narratives pointing to the fact that inflation is dead. I shouldn't use the word fact because, in my opinion, it is not. It's not even close. And if somebody wants to question that, please listen to the podcast that I put up yesterday, where I went over the treasuries, the markets, and also gold and silver, and the SPX and the NDX. So I went over the cash markets. And within that, I gave a pretty good, what I called my introduction, which is a laugh because it was very long, but talking about modern monetary theory and inflation and how inflation numbers get reported and how the smoke and mirrors is built into how they report it. And the fact that people are now talking about, if we're going into a recession, which everybody is considering should be happening, then normally with a recession, inflation is not really within that. It's usually a period of deflation, but that's not the case because, in my opinion, the Fed just injected another $1.7 trillion of stimulus into the monetary system. And yes, part of that will go to start to pay for the infrastructure package that was passed last year. But much of it, as was pointed out by a subscriber, and I thank you for that information, I overstated because feeling I don't want to give the impression that 1.7 trillion goes to that infrastructure package, because that would be incorrect. It is actually going to fund the government, or the operations of the government. And with that in mind, we also cannot discount or underestimate that the government will reach its debt ceiling on Thursday of this week. And then from that period on, then we start to run into the possibility of trouble. So the Congress, both the House and the Senate, need to pass a bill which will allow the Fed and the government to raise the debt ceiling. Failure to do so could put some jeopardy or jeopardize operations of the government, and we might see the Treasury starting to default on their obligations, and that would be a very negative thing. So, but it's up to right now the House of Representatives and the new majority in the House. And some of the rumblings have been that, no, there's no way, we're not going to raise it, we're not going to do it, we're going to fight it. But at the same time, the Speaker of the House has come out and said, well, we're willing to talk. And so, because if we get some budget concessions, and then maybe we start cutting off the budgets of this and that. But I don't really think that that's going to happen, because I think what the Speaker is really referring to is cuts that just won't fly. And so we'll see. So we've got that going on, and that may just stall out any stronger rally attempts, but add some fuel to sellers coming in. So we'll see. So again, for tomorrow, I believe that we have our moving averages remain in a fairly strong position. They're the shorter term, or the shorter time frame, the 5, the 8, the 20, they're all reacting to what we saw today, and they're getting a little bit weaker, and they're hooking a little bit lower. And the 55 is kind of just not really doing anything. And the 200 is kind of now just sloping higher. So that part has not changed. If the market should turn and start to come down, here's what we think might be going on. We have the possibility, if this is, again, a 1, the 2, the 3, ABC 4. So this could be A, B, and we still get a C wave, which brings us down below 39.97, which was the overnight low. Then we might get a 4 and still then turn and rally and then reach these levels. If the market is done and this minor wave 2 is done, then again, what my point will be is like what we saw here, that would just be the absolute infinitesimal beginning. That we will just start to drop. We'll break below the 50. We'll start to break below the support at 39.86, right? Resistance on the way up, support on the way back down. And then we do have some price support at 39.60. We'll go below that. We'll break below 39.50, which was this low. We'll start breaking below those, and then eventually we'll break below 39.47, which is where the 200 EMA is sitting. Break below this support at 39.40, and then just keep going. And I believe if it is to come, it will come very fast. It's just going to push. It's just going to, sellers are available, and they're selling with, as I term it, a purpose. That will start to give us some strength and confirmation that wave 2 is over, wave 3 is beginning. And again, if it's a minor third wave, it's a 3 of 3 move. It is a minor third of an intermediate third. And so the combination of the two should begin to show a persistence and the velocity or the volatility of the drop picking up speed. Okay, going over into the NASDAQ. It is exactly the same story here in the NASDAQ. So I'm going to go ahead and add, we even do it inside. So I need to go out one more so I can put up my outside, right? If I'm going here, I'm going to put up just the retracements, and that's starting from there down to there. And so we still have, right, 12,489. That's 618. On the way back up, we still have 0.382. Actually, I'm sorry, those are wrong. I did that before. I put them up wrong. It's not minor 2, intermediate 2. It's minor 2. I apologize for that. Let's start over. We're going to go to there, to there. Much better. Now go back down to that hourly chart so we can see the internals. So what we still have, we did manage to get above 11,600. Actually, the number was 11,611. And we did. We did on Friday, and then we did again overnight. And so having reached that level, I can tell that just within this small fifth wave, it likely is just the third. Same deal. You can see it. Looks like we're coming off in a fourth wave. Now, if we're going to just build on that, and it'll be 1, 2, 3, 4, 5, then what do we have coming up? Let's put in again some extensions just for this small fifth wave. So what we want to do is we'll go to the bottom of 3 to the top of 3. Come on, there. Down to the bottom of what would be 4. And again, this is an estimate because I'm not 100% certain that this is going to be the end of this small fourth wave. We may finish by going down, equaling it, or slipping just below it, and then we would make an adjustment to the fibs. But if this finished wave 4 and we now continue to move higher once Globex reopens, then where are our resistance? We have resistance at 11,635, which would eke out not quite a new high. And then we have our next level at 11,665, because I don't like that other number. So we have that, and then we have 686 or 87, and then 11,700. We have the 618 of the larger, which would include that top for minor wave 2, 0.618 retracement would take us up to 11,740 to 750. That would be, and then this would be wave 5. Indeed, if this is indeed the wave 5 would be equal to wave 3 at 11,760. So these possibilities still exist. So we still can get ourselves up there to complete, and it would remain, folks, it would remain a minor 2 in my view. Now, I know there's a lot of talk, and I'm getting a lot of comments, people coming back saying, well, I'm starting to get bullish, this is happening, that's happening. And it's like, keep it in perspective. Same deal. I just take this out, pull out that 4-hour chart and go, well, there is the intermediate 2. Look, they look pretty much the same. We get 5 down, the weird 3 up. We had 5 down. We got a strange but very corrective 3 up. And so that remains in there. Now, this channel line happens to be the one that runs all the way up. I got to watch the weekly chart to show you. Off of the all-time high, connecting the March of 2022 low, the August of 2022 high, and then almost it would have connected with the December 2022 high, but didn't quite make it. So that's why I'm leaving it, because if we're connecting it to the highs and we're looking, and people are starting to think, well, we can continue to go up, what's going to give confirmation? I'm going to show you how far away we are. 12,319, 12,320. That's where this channel line is now coming through at the high of intermediate wave 2, which this minor wave 2 cannot break, because then it's not a minor 2. So we have that in place, and it could be a target that the market's going to shoot for. But if we get anywhere close to that and drop, it remains a minor 2. So if we're to switch this whole count around, the market needs to break above 12,339, and then again above this channel line. So for right now, I am continuing to look at it as a minor second wave, still having upside potential. Again, it's not a breakout, because if we look at the fibs and we look at the relationships between them in a second wave, the most often it's going to reach between a 50 and a 62% retracement of that first wave. So we're not really out of sorts here in that it's going above any of the expectations of what it could or should do. Now, what threw it all off is, like, I'm going to go back and open this back up, go this way, was that this failed basically to get itself strongly above the bare minimum, which was 0.236. And when it did get up to 0.382 and did so in a 5-wave rally, it was pretty strong in terms of, wow, minor wave 2 could be over and we're going to drop. And the market did initially get up there and turn around and reject that level. So it gave all of some initial signs that that was the case. What happened? Well, we know. Turned and said no, and continued to move higher and did some explosive moves up on last week's CPI number, et cetera, et cetera. But it almost seems, folks, that the markets are going to do what the market's going to do, and it has to do with expiration, and it has to do with how money is being shifted around via the derivatives. So keeping that in mind, I'm going to continue to allow for a little bit more upside. We have resistance tomorrow at 11,605, 11,635, 665, 685, 11,700, 11,740 to 11,760. Those are our resistance areas for a stronger upside move. And that, right, if we get up to that level, market space is going to be up 200. So we're going to have to find the reason to be going up 200 and what they're going to tie it to. So again, we're moving into earnings season. So we got the banks last week, and that's shifting a lot of people's attitude into, well, they did really great. It's like, possibly, but we're still hearing a lot of negativity in terms of that the U.S. economy, or in the United States, along with the rest of the world, is moving into recession. Then we get news like this. Economy doing better than expected, but recession risks remain. And somebody's out there stumping. So how do we want to interpret that? Because it's kind of like, well, they're hedging if it should go up, they're hedging if it should go down, et cetera, et cetera. So again, I'm going to stick to the Elliott and just into the day-to-day. Now, one thing I want to add, again, I want to state, I do not carry a particular bias towards the market, that being I'm not bullish and I'm not bearish. I'm giving the Elliott wave perspective, and which is considering that the longer term trend right now is still down. The market is still correcting. And so within that, we're going to get upside moves and stronger upside moves, along with strong downside moves, because the market does not go in one direction consistently or permanently until that move is done. So we get these up and down. So remember, in a 5-wave decline or rally, wave 1, and then we have wave 2 correcting wave 1, and then we have wave 3, and wave 4 corrects wave 3, and then we have the 5th wave, and then that completes that movement. But then the corrective phase is an ABC counter move to what we just did. So that remains in place. And so as we count this out, we're going to be in 2s and 4s for a while. Now, moving averages, they continue to be in the exact same position as we explained there, at least on the hourly charts, via the S&P. So the NASDAQ follows the exact same thing. If we should start to turn here, and it has specific purpose for deciding to turn negative, and trust me, there are so many things out there, and we all need to realize that. And to feel that we somehow, and our market and our economy, are just going to blow off what's happening in the real world for the sake of running the market up for whatever reason they come up with, understand that it may be very, very short-lived. Okay, so moving averages are still in place for the market to inch its way higher. We have some changes going on, but that's just following what we have here, like the 4, the 8, giving a little bit of a turn. The 20 is flat, the 50 is flat, the 200 is flat, but that pretty much goes along with what happened today and also yesterday. So that's going to be the update for today. And again, tomorrow, no numbers. So we could be very much inside, maybe slightly higher. And our next update will be on Tuesday, January the 17th.